You're watching Business Incorporated live on Channels Television, 1:30 p.m. right here. Coming up on the program, Chinese investments in Zimbabwe's lithium industry expected to boost Zimbabwe's dominance in lithium production. Kenyan shilling hit a new low against the US dollar, leading to concerns about rising costs of goods. The International Energy Agency has cut its global oil demand growth forecast for the first time this year. Hello and welcome to the program. I'm Ladi Williams. Let's kick off with the markets as usual. Let's take a look at what's happening on the African continent now. We see the NGX there down again at intraday, same as yesterday. It's down 0.63%, losing the 65K level. Was getting used to that level. It's down now 63,640 points. And we look at South Africa there, 76,000 level, 0.50% up. On the flip side, other markets we track right here in Africa, we see the EGX 30 continuing that bullish run, 1.65% this time at intraday, almost 2%, 17,420 points. And we see the Kenya index too, also up there, 0.56%, 114.47 points. Let's take a look at what's happening right there on the NGX. Joining me now is Omobola Adu, investment research analyst, AfriInvest. Joining me via Zoom. Great to have you on the show.
Yeah, good afternoon, Ladi.
So last I checked, market was down again at intraday, same as yesterday. Got that big drop yesterday, over 2%. How's the market looking right now? Is this just good old profit taking we're seeing? Hello, Mobola, can you hear me? All right, we'll try and get Omobola back on. Let's flip over to the Middle East now. Let's see what's happening in the Middle East. We see it's mostly positive sentiment right there in the Middle East. Abu Dhabi index, Dubai index, both in the green at intraday today. We see the Abu Dhabi index, 9,636 points, up 0.15%. Dubai index, that's 4,011 points. That's also up 0.61%. On the flip side, unlike what we saw yesterday, Saudi Arabia index, the lone gainer right now in intraday, and the Qatari index, that's up 0.93%, almost 1% right now at intraday. We'll look out for how the markets close at the close of trade today. Let's see if we have Omobola back on. Okay, we don't have a Mobola yet. Let's take a look at what's happening in Europe then. EU lawmakers narrowly backed the so-called nature restoration law in a vote, but with plans to restore up to 20% of land and sea by 2030. The law is being criticized by farmers. Joining me now, we have Chiponda Chimbelu right there in Berlin. Great to have you, Chip. Can you break down the law for us?
The controversial EU nature restoration law aims to return at least 20% of land and sea to its original state. So it will force member states to re-wet peatlands, and peatlands, which can also be called bogs, are sometimes drained for agricultural activities. The new law aims to return some of them to nature, and it also wants to encourage farming activities that promote sustainable soil use and bring back pollinators like bees or other insects and birds to farms. But this is something, of course, that has come under some criticism, especially from commercial farmers. They are worried that they may end up losing farmland, which is restored to its original state. The farmers say that that will reduce food security in Europe because they won't be as productive as they have been if they are forced to adopt more sustainable methods of farming. In its defense, the European Commission has said there are many funds already available to help farmers to transition to sustainable farming.
All right, Chip, but how would the law affect the EU's climate targets?
Well, around 6,000 researchers have signed an open letter disputing the arguments made by the European commercial farming lobby, which has been saying that the law threatens food security. The open letter says that climate change and the loss of biodiversity are the real threat to food security. Now, that pretty much backs up what the EU Commission has been saying. It has said that rejecting this law would have put the whole bloc's green agenda at risk. The European Union plans to be net zero by 2050, so the new law is part of a wider range of measures that the bloc has been introducing. While the current data shows that carbon emissions have been falling in Europe, some experts have been warning that they may not be falling fast enough to meet the net zero target. The goal to restore 20% of land and sea to its original state is something that could help reduce carbon emissions because trees in forests and the vegetation in the peatlands, for instance, that could help absorb more carbon dioxide.
All eyes on those targets. Now, what can we expect from markets in Europe today?
European markets are expected to trade higher today. The latest inflation data from the US has shown that the end of the post-pandemic tightening cycle in terms of Fed interest rate hikes might be in sight for the world's biggest economy. And of course, traders will also be looking out for US producer data today. And here in Europe, they'll be watching for any business-related developments at the EU-Japan summit.
All right, we're looking out for that summit. Thank you so much. That was Chiponda Chimbelu right there in Berlin, giving us the details from European markets. Let's head on to the U.S. Now, so U.S. markets, stock futures rose today after the S&P 500 closed at its highest level in over a year. Markets also looked ahead to another key inflation reading. That's talking about the PPI right there. Got that CPI data yesterday. It was quite good for the U.S. Dow Jones Industrial Average 0.14%, still, in that positive territory after closing in the green yesterday on that positive CPI in the U.S. S&P 500 futures 4,521 points, up 0.30%. And we see NASDAQ, the tech-heavy NASDAQ there, up 0.66%. Shares of PepsiCo rose more than 2% after the beverage and snack giant reported earnings and revenue for the second quarter that beat analyst expectations. Meanwhile, we see Delta popped about 4.3% after the airline posted record quarterly earnings and raised its outlook for the full year. So we're looking out for how markets close right there in the U.S. Maybe it might be positive. And to Asia now, Asia-Pacific markets rose across the board after the U.S. inflation rate for June came in lower than expected at 3%, the smallest year-over-year increase in about 2 years. The figure was lower than the 3.1% expected by economists polled by Dow Jones. And we see right there, it's all green behind when Nikkei, 32,419 points, up 1.49%, and the Kospi up 0.64% close today. The HSI index, 19,350 points for the all-share index, 2.60% gain. And look at other parts there. Shanghai Composite also up 1.26%. The S&P ASX 200 in Australia up 1.49%. All right. The global oil market and the International Energy Agency has cut its global oil demand growth forecasts for the first time this year, citing persistent heavy economic headwinds, especially on wealthy countries. In a report released today, the world's leading energy watchdog said global oil demand is now on track to climb by 2.2 million barrels per day in 2023 to reach an average of 102.1 million barrels per day. That figure represents a downward revision of 220,000 barrels per day from the 2.4 million barrels per day global demand growth forecast last month's report by the IEA. The IEA explained that the global oil demand is coming under pressure from the challenging economic environment, not least because of the dramatic tightening of monetary policy in many advanced and developing countries over the past 12 months. All right, let's flip back now to the NGX. I believe I have Dr. Omoboladu back again. I hope you can hear me now. Let's try it again.
Yes, I can, Adi.
Fantastic. So We got that big drop yesterday on the NGX, over 2%. It's down again at intraday. What are you seeing right now in the market? Is this good old profit taking?
Yeah, just like you rightly mentioned, coming off yesterday's about 2.4% decline, we're seeing the market down roughly another 2% expected by the end of today. So what we're seeing can just be attributed to, like you mentioned, profit taken by investors. We know that in the past couple of months, right, going back since March, the market has been hot. We know stocks have hit new 52-week high. So we're just seeing a situation where investors are now taking a bit of profit while playing the market, especially coming into the second half of the year. We want to look at possibly more direction in terms of, we know the MPC should be meeting later this month, and just to gauge expectations for the remaining half of the year.
And which stocks are moving the market right now?
Yeah, so currently we're seeing that in the telecom space, both Airtel, MTN are currently down. Airtel is down roughly around 10%. MTN is also down roughly around 5%. So also banking space too, we're seeing big names like GT, Zenith, Access, all down today, UBA, Access. And it's not far-fetched, right? If you look at the Nigerian market and the kind of stocks that most investors usually go for, these are usually the hot picks around for most investors. So with, like we mentioned earlier, with the way prices have trended recently, it's a good time for most investors, to take a little bit of profit while keeping a little bit of volume in these stocks to see the direction for the remaining part of the year, and also looking at expectations. Earnings would soon be coming in, at least for the half of the year. So we believe that these are possibly reasons why we're seeing the market trend in this position.
All right, and yesterday we saw FBNH that dropped the most, about 10%. Does it have anything to do with the drama we're seeing with Mr. GTCO and Echo Bank?
Yes, so these are some of the things that will be playing around investors' mind. But regardless, what we're seeing is more or less a general market movement. So it's not just particular to First Bank. So like I mentioned, most of the banking stocks are currently down. In fact, in terms of the overall banking index, the banking index is down roughly close to 25%. This is generally broad-based, not just peculiar to First Bank, but in terms of the dynamics, this is something you could have expected to be at the top of the mind for investors, concerning you don't know where the likely direction this whole drama, so to say, would play out eventually.
Yeah, definitely a lot of drama there. But are there any stocks on the pullback that investors should, be putting on the watch list right now?
Yeah. So I mean, if we look at the general market, right, and also some of these stocks that we mentioned that have dipped recently, with stock prices coming down for investors that have not been in the market, it also gives room for them to come in, especially for those banking stocks that we've mentioned. So with prices coming down, it means that you are going to be entering the market at a lesser price, at least compared to some few weeks back. So coming into these stocks that we've mentioned, especially those banking and telecom stocks, and giving expectations that in general, this year is going to be a good year for equities. We expect foreign investors to also come into the market. We know that in terms of participation in the market, especially for net inflows, with what we saw in May, foreign investors' net inflow share recorded the first positive for this year, even going back to last year. So there's still space for potential gains in the market for most of these stocks that basically move the markets.
And I'm sure most investors now be looking out for the next FTN processors with that incredible performance in the first half of 2023, over 700%, profit. But definitely we'll be looking out for the next one for the second half. Thank you so much, Dr. Mobola Adu, investment research analyst, AfriInvest. It was great having your perspective.
Yeah, thank you for having me.
All right, still ahead on the show, we'll be looking at the commodities market update, taking a look at ginger production in Nigeria. That's our next conversation. Do stay with us. Welcome back. Now to our next conversation. Ginger is one of the widely consumed spices with several medicinal, industrial, and culinary uses. It's available in a variety of forms, including raw ginger, dry ginger, and ginger powder. It's commonly used in beverages, cocktails, and so much more. Nigeria is Africa's largest ginger producer and the world's second largest, with an annual production of 691,000 tons and a production share of approximately 16.9%. Let's take a look at how that's looking now. Victoria Momo joins me now, analyst, financial derivatives company. Great to have you on the show.
For having me.
So, Victoria, despite being the largest producer of ginger in Africa, we're seeing ginger farmers in Nigeria have yet to fully harness the economic benefits of, growing ginger, leaving them out of a huge, global ginger market, about $3 billion worth. What are the reasons for this?
You see, we still have the situation with, exporting raw materials to process and then bringing it back, at prices that are 4 to 5 times higher than the prices we sell it at the export market. And this is affecting commodities like ginger, because we still export the raw material. We still export ginger in the raw form, either fresh or dried. And it's taking a toll on the actual export value we are supposed to earn when we add value to our ginger and export it in the global market. I mean, we still export. We've not been able to really export other derivatives of ginger, including the internationally recognized ginger oil and ginger powder, which could, yield more revenue into the country. And as a result of that, we just get only as little as, less than 4% of the export market value of ginger from the export market. And then again, we also have some certain issues that actually, hinder ginger production in Nigeria. And this is because, majority of the production is actually carried out by small-scale farmers. And they contribute 90% to the ginger sector. And those farmers are actually challenged with, different problems that actually limit production. For example, they have issues with low pricing, and that is because of, the middlemen actually shortchange them. What do I mean by that? They actually, purchase this raw ginger from them at lower prices and sell it, at higher prices in the international market. And that is actually, constraining the profits that farmers would, get from the sale of ginger to expand farm operations. And then there is the issue of insecurity, because, ginger is actually produced in the northern side of Nigeria, and it's no news that there is insecurity in that particular region. And because of that, we have shortage of ginger, and that is limiting our, capacity to explore the potentials of ginger production in the country. And then there are issues of, inadequate funding, the use of crude implements to farm, to cultivate ginger, and that is actually restricting the amount of ginger that we have for exports.
And I'm sure they can also exploit ginger tea. I like ginger tea, right now. But looking at the global market now for ginger, is expected to grow by about 4.5% between 2023 and 2028. What prospects does this create, given Nigeria's goal to diversify, its exports? We're looking at non-oil exports at this time.
You see, the demand for ginger has been, increasing due to the increasing awareness of its medicinal properties, and then the application for food, culinary uses, and as such as many other reasons. Even back in 2020, when we had the COVID-19, there was a rumor that eating ginger could actually cure the COVID-19 virus. And then we saw a surge in demand for ginger, and then the farmers were smiling at the banks. So since that period, we've also seen increase in price and increase in demand, for ginger, even globally. And then, just like you said, there is a projection that global demand for ginger will continue to increase, and the market will increase by 4.5% between the next 5 years. I mean, that presents like a really great opportunity for Nigeria, especially at the time where we are looking towards diversifying our, exports. It's not just about producing ginger in large quantities. It's also about adding value to our ginger. invest in industries that would actually, form or that would actually produce or add value to the ginger that we actually produce so that we can yield more revenue from the sales of ginger in the export market. And then we have the aspect of that value addition that actually comes with a variety of processes that involves, from planting to the exporting to logistics. And this would help to create employment opportunities along the value chain. And in addition to that, we also have the issue of supporting the economy in the sense that we will see more, sales volume of ginger in the country.
And I know India's production and export of spices, it's earned them that nickname, the Spice Bowl, throughout the world. They have an annual production of around 1.8 million tons. So the nation is currently the world's top producer of ginger. Are there any lessons that Nigerian investors can learn?
Actually has earned the name as the, like you rightly said,
Ginger
and that
Bowl,
is due to the fact
Spice
that
Bowl.
they were able to maximize the potential of ginger production. And one of the major things they did was to add value to ginger. So they didn't just export ginger in the raw form; they also added value, and they're like one of the top producer of ginger oil, which is highly demanded in the global market. So there was investment directed towards the production of ginger, and then value addition that is key in order to generate more revenue into the country. And then there was improvement in terms of the use of tools to cultivate ginger in order to improve the production of ginger in the country. And then the country actually has recorded a surge in the revenue earnings from ginger production. And then there are also it has also earned them that position as the largest producer of ginger in the world.
Right. All right. Thank you so much, Victoria Momo, analyst, financial derivatives company. Thank you. All right, now let's head on to other stories now. See, Chinese investments in Zimbabwe's lithium industry expected to boost the country's efforts to capitalize on the global shift towards renewable energy and stimulate economic growth. 2 lithium plants operated by Chinese companies have recently commissioned in Zimbabwe, positioning the country as a significant player in the lithium battery supply chain. Zhejiang Huawei, Cobalt's local unit, Prospect Lithium Zimbabwe, inaugurated a $300 million processing plant at the Arcadia lithium mine near Harare, following its acquisition of the mine in 2022. The processing plant has an annual capacity of processing 4.5 million tons of lithium ore and producing 450,000 tons of concentrate. The Zimbabwean government has set a target of achieving a $12 billion mining economy by the end of 2023, with lithium contributing at least $500 million. And the Kenyan shilling has hit a new low against the US dollar, leading to concerns about rising costs of goods in the short term. See, Kenya being a net importer with a growing trade deficit, saw its import bill rise by 17.5% to 2.5 trillion Kenyan shillings, while export earnings stood at 873.1 billion Kenyan shillings. Central Bank of Kenya quoted the exchange rate at 141 Kenyan shillings to the dollar, marking a depreciation of more than 13% since January. Analysts predict that the shilling could reach 145 Kenyan shillings by the end of August, driven by high U.S. Federal Reserve rates. A weak shilling means increased expenses for local traders and manufacturers who need dollars for international trade. And Nigeria's central bank has directed international money transfer operators to commence remittances payout in both naira and foreign exchange to beneficiaries, ending a 3-year ban on the policy. In a statement released on its website, the CBN announced that it has also directed that the investors and exporters window foreign exchange rate should be used in determining the exchange rate for naira payouts. Analysts say this latest policy removal is another step towards loosening the strict control the CBN exercised over FX rates in the last 5 years. In December 2020, the financial market regulator banned banks and IMTOs from paying recipients in naira. The policy also stated that only banks could transfer funds onward to recipients. And that's the show today. Thank you so much for watching. If you want to watch this again, just head on to our YouTube channel. Just flip over to YouTube, search for Channels Television, click on videos. You can watch all our productions. Thank you again for watching. I'm Ladi Williams. Bye for now.